Today, we are gonna be talking about why Adobe is a good long-term investment. Adobe drove record revenue of $19.41 billion in fiscal 2023 and 17% year-over-year apps growth, with strong momentum across Creative Cloud, Document Cloud, and Experience Cloud. Adobe Chief Executive Shantanu Narayan said in a statement announcing the results. Analysts surveyed by FactSet had expected, on average, net earnings of $4.13 a share on revenue of above $5 billion. But a tepid sales outlook gouged Adobe shares. The company forecast first quarter sales between $5.1 billion and $5.15 billion. Analysts are expecting about $5.16 billion. For fiscal 2024, Adobe is forecasting $21.33 billion to $21.5 billion in revenue, far short of the consensus $21.73 billion predicted by analysts. Shares of Adobe have popped 85.5% in 2023. The broader S&P 500 index, by comparison, is up 22.6% this year. Leading into Wednesday's results, analysts were uniformly expecting a breakout quarter for Adobe. After executives predicted a really strong performance during the company's Analyst Day in October. Revenue growth forecast. Even though a company's earnings growth is arguably the best indicator of its financial health, nothing much happens if it cannot raise its revenues. It's almost impossible for a company to grow its earnings without growing its revenue for long periods. Therefore, knowing a company's potential revenue growth is crucial. In the case of Adobe, the consensus sales estimate of $5.08 billion for the current quarter points to a year-over-year change of plus 9.2%. The $21.42 billion and $23.91 billion estimates for the current and next fiscal years indicate changes of plus 10.4% and plus 11.6%, respectively. Last reported results and surprise history. Adobe reported revenues of $5.05 billion in the last reported quarter, representing a year-over-year change of plus 11.6%. EPS of $4.27 for the same period compares with $3.60 a year ago. Compared to the Zacks consensus estimate of $5.01 billion, the reported revenues represent a surprise of plus 0.82%. The EPS surprise was 3.39%. The company beat consensus EPS estimates in each of the trailing 4 quarters. The company topped consensus revenue estimates each time over this period. Valuation. No investment decision can be efficient without considering a stock's valuation. Whether a stock's current price rightly reflects the intrinsic value of the underlying business and the company's growth prospects is an essential determinant of its future price performance. Comparing the current value of a company's valuation multiples, such as its price-to-earnings P/E, price-to-sales P/S, and price-to-cash flow P/CF, to its own historical values helps ascertain whether its stock is fairly valued, overvalued, or undervalued. Whereas comparing the company relative to its peers on these parameters gives a good sense of how reasonable its stock price is.